Hello, it's Paul Brown here from Well21 with the latest update on the coronavirus COVID-19 situation. Just a summary first of how we're here to support you. Obviously, health and safety of clients and staff is paramount concern. We're open for business. We'll continue to support you with advice. We, as I noted in my email earlier this week, we're preferring to meet people by phone or video conference instead of face-to-face. Investing in a time of crisis takes patience, so don't panic, consult us. I'm pleased to see that I'm not really seeing too much signs of panic, which is good. I have some charts that I will show you in a moment as well. And obviously we're here to help. So just running through firstly health and safety. We've got a range of measures, hand washing and so on, within the office that we're abiding by. We're probably likely to have, we'll keep the office manned through the week and going forward. We're probably going to have some people working from home just to reduce the number of people that were in the office. All of our staff are currently healthy and well, and obviously if anyone feels unwell, they won't be coming into the office until they're fully fit again. And we encourage all of our clients to be aware of the health and community guidelines around minimising your risks, and you can find that at the Department of Health website, and there's obviously plenty of material on mainstream media at the moment, so please keep up to date. In terms of continuity, I mean, we're set up really to continue providing advice like we always do. We can work from home if need be, and we want to maintain that high standard of service. We've got the infrastructure and technology to allow us to do that. And we're planning various contingencies. We just want to be able to continue to operate as per normal, basically. So in terms of meetings, we're obviously available to continue to provide advice. Video conferencing, we've already had some video conferences during the week using software called Zoom. It's very straightforward to use if you have a smartphone or a tablet or a desktop computer with a camera and microphone. It's very straightforward to use. We just send you a link basically, and you click the link, and then you set up a meeting with us at the meeting time. Basically, we can share screens and pretty much like meeting in person, except it's done by video. In terms of signatures, we may need to send some documents out to you for signatures, but there's a lot of work going on behind the scenes about whether email confirmations are enough or digital signatures. If you really do want to meet with me in person, we might just have to think about how we manage that at a later date. But any questions, of course, please contact us. You can email us, paul@well21.com.au, or Kylie or Deb, or obviously telephone the office 5445 3441. Just a few notes on the investment markets. These are details that have been provided to me by Centrepoint, Professional Investment Services. It's vital for investors. It's general information, so please contact me about your individual circumstances. This is general information only. So it's vital to sort of focus on your investment time horizon. The worst thing to do, after a large equity market correction is to lock in those losses by selling the exposure if you don't require the assets in the short term. So diversification is obviously very important across different asset classes and also a range of different securities and different fund managers. I mean, the best way to try and manage risk in a time of high levels of volatility is to use good diversification. Timing the market's extremely difficult, and we don't recommend trying to do that. Retain the growth assets exposure and be patient using enough diversification. Just a few charts to highlight, these are very long-term charts, like starting at 1900 through to 2020, so a 120-year period. Investing $1 in Australian shares in 1990, that dollar would be worth $481,000, nearly $482,000 at 11.5% per annum on average. Australian bonds, a different asset class, $1 would be worth $1,017 at 5.9% per annum, and cash would be worth $242. Obviously, the income's being reinvested in this example. So 4.7. The reason there's such a large difference in the dollar amount is because of the effect of compound interest. Okay. This is just a little chart that you often see that just talks about the roller coaster of investor emotions, and some of you are no doubt feeling some of those emotions. I mean, we're all concerned about our health and the health of our family, but you know, the investments are very volatile. I mean, we'd had a decade really of pretty good investment returns to the end. 2019 was an excellent year, and I think we're all sort of feeling pretty good about the investment markets. And then within the space of literally a couple of weeks, we've ridden down this roller coaster. As I say, I'm not seeing too many signs of panic, but people are feeling fearful in the community, and there's issues such as that. Okay, so the importance is to sort of try and manage those emotions, because you know, that's when you make more sensible decisions. Okay, and the final chart I have is again, this is a very long-term chart of the Australian share market that shows that it has climbed a wall of worry for the past 120 years. Many things have happened, you know, through history, and the share markets have still managed to progress forward. Okay, this seems a very unusual situation. I mean, the Spanish flu, World War One, was horrific. Okay, we had a share market crash in 1929 that led to the Depression. Obviously, there's a range of other things through history here. This is the 1987 share market crash, which is a 50% fall in the market. Actually, just stepping back to the 70s, there was the OPEC crisis and stagflation, which led to a 59% fall in the markets. I think that was 1974-75. GFC was 55% fall in the market, and obviously here we are here with COVID-19 coronavirus, and it's actually more like a 35% fall in the market at this point in time. So that's you know, a step through the history of different crises we've had, I guess. So we're here to help. Just summing up, we're here to help. We're going to be available on the phone or via email. Please listen to all the government advice, and most importantly, take care of yourself. And I'll continue to update you as I can with changes coming through. By the way, there is some government stimulus changes to do with pension payments and possibly release of benefits from super. We'll chat to people individually if that impacts you. So thanks for that. Please make contact if you have any questions. Thank you.